Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. There is a sign up link if you want to support the show by signing up and trying it out. Before you do that, read the long form article to understand the pros, cons, business model, and there's also an ongoing fee revamp there that should allow for tighter alt spreads, faster listings, and all that good stuff. So some good changes going on there. Check it out if it makes sense. If it doesn't, that's fine as well. It's your life. So as far as BTC goes, on the weekly time frame, not a lot has changed yet. We're getting there. I still think on the weekly time frame, if you want the weekly to align with some of the bullishness we're seeing on the 4-hour and potentially the daily, you need a weekly market structure break above 28k. Absent that, the market is still drifting and making lower lows and lower highs. It looks better on lower time frames than before, but if you want the weekly time frame shift, you need it above 28k, which would make the argument for a higher high and a break of the drifty downtrend in general. Okay, that's the first thing. The only other thing I'm watching on the weekly time frame at the moment for short-term trading is the previous week's high. If we start getting a failed breakout above there may be short-term rotations lower available. Generally speaking, we had some good Blackrock ETF news, something that I don't think should be understated, and that occurred before we reached the big weekly level at 24.3. We sort of had a low come in, the market started pushing since. If it wants to break down to that area of weekly support from 24 to 22, that's still acceptable, but for the time being we have to trade today's market, and today's market is pushing higher, so the relevant levels are break of weekly market structure at 28. Earliest sort of short-term trading opportunity, if it's going to be weak, is previous week's high failing to accept above there. That's what's on my radar on the weekly time frame. So if we were to extrapolate that to the daily, a couple of levels have my attention recently. The first is the double bottom we made at 23.4-ish, and the behavior there has been quite good. So you had this double bottom, market closed below, it looks like a breakdown. Next day closes above, right? And it closes above on an engulfing candle. So all of that is very positive. And unlike some of the other green candles that we've had, like this one to some extent as well, a lot of these moves higher have immediately mean reverted and sort of bled down the next day. That's not been the case in the current price action. The reclaim candle didn't bleed back out. The next day was also an engulfing, didn't bleed back out, and today is looking relatively positive as well. So there are some of the lower time frame strength that I mentioned earlier is bleeding onto the higher time frames. The weekly still has some progress to do in that regard, but the daily you can see signs of it as well. So that's the first thing that's relevant on the daily, is the failed breakdown there. That's positive. As far as the daily levels we have to deal with now, honestly, still, given how the market drifted through this sort of 26 area, I'm not a huge fan of it in terms of daily levels. If I had to pick, I would say I'm still generally fond of the range high at 27.4, regardless of whether you want to use that as the old cluster top or the former range low or the recent range high above which we had a deviation. It all comes back to the same level at 27.4. So I think if you were to have a daily close above there, given we've already had one fake out at the level, a second fake out is less likely, and a real breakout from there is more likely towards the sort of 29-30k range highs, I think would make sense. So that's really the daily pivot that would cascade a lot of the high time frames to align and look positive as well. In terms of daily time frame pullbacks, again, is a bit tricky because this area is slightly crowded. I really think the 4-hour and perhaps even the hourly are better for pullback structures. Generally speaking, the area that I'll highlight is the pre-breakdown consolidation around 25.8 to 25.9. That seems to be decently relevant from a technical basis, although if the market keeps going as it is, I'm not sure it makes a ton of sense to look for a pullback there. But purely in terms of daily structure, that's a relevant level because it was the consolidation before the failed breakdown, so those tend to be important levels of support. For our purposes, if you want the daily time frame to align with some of the strength we're seeing on other time frames above 27.4, it starts to look pretty good. Okay, now the 4-hour I mentioned in passing, so it's worth going back to. I think our old range for this is still relevant. Our old range being 26.3 to 27.4-ish, something to that effect, as you'll recall from previous episodes of Monday Markets. Yeah, 26.3 to 27.4. Now, if we look at the most recent 4-hour price action and just extend this a little bit to give us more leeway, so just so we know exactly what's going on. Okay, so if we look at the most recent price action, we had, I think the last time we spoke, a reaction to resistance here, which I mentioned would make sense for a lower high. The market moved lower, great, but now that level looks to have turned from resistance into support. At least all the 4-hour closes are above it, so I think as long as that is the case, and I think it makes sense to also just box out this cluster consolidation at 26.4 to 26.2, or just 26.3-ish as a whole. It's a reasonably well-defined area. I think as long as, at least on lower time frames, the market is above here, it looks positive and constructive. Obviously, it's unfortunate at the time of the recording of this video that the market has moved significantly higher from this level, so it's not available as a levels trade. But if you were following this range for 3 or 4 weeks, or however long we had it on Monday markets, hopefully this price action was instructive in one way or another. So at least for short-term trading, we are around the range midpoint at the moment, but bigger picture, it looks like we had a bearish retest at the range low. Now we've reclaimed it, and as long as that is the case, so no acceptance below 26.3, 26.4, your targets are midpoint and range high before reassessing. Okay, so that looks positive. I would note, of course, as we said on the weekly, that I wouldn't necessarily love to ape into this range midpoint because that range midpoint also takes place above previous week's high. So if there's any chance that the market at least dips or offers a bit of a spike trap type of setup, it would be at the previous week's high plus range midpoint. So where the market is right now, as it is on the screen, probably isn't the best area. At least for me, I won't have a setup for momentum continuation unless maybe we get a pullback to the mid with something pretty compelling to allow us to trade higher. But I think the important parts of the range, as always, are the extremities. The market is accepted above one extremity, so generally speaking, there's a bias towards the other at 27.4 until proven otherwise. And I really think that's all there is to say. Even on the hourly, you can see our same 4-hour cluster looks pretty good. And the range makes as much sense on the hourly as it does on the 4 hours. You can extrapolate all of your views from that time frame to this one. Yeah, I think that's all I have to say for BTC. And let's talk about ETH. Maybe we'll revisit this if it goes to 50k while I'm recording this video. So ETH, on the weekly time frame, it actually hit one of the support levels that we discussed. If you'll recall, we had this as one of our weekly ranges, and it's also in the newsletter, the 1700-ish levels, 1680 to 1700, which is this weekly range. And the market closed above the range midpoint and is bouncing at the moment, which is nice. I still think bigger picture, if you want the weekly chart to really look good, it needs a weekly close above 1.9, and that's probably going to be a very fast trade to fill in some of this one-sided selling into the pre-breakdown level at 2500. So there's a lot of space to capture there on the weekly, but for the time being, the range we have is 1.6 to 1.9, and it looks like 1.6 is supporting with potentially some meddlesome areas at 1780, 1800, which are more visible on the daily time frame. But for the time being, bounces off the midpoint, fine, good, all wonderful. On the daily time frame, this is probably my least favorite out of the ones we're going to discuss. This daily looks good at the moment, pending the close, because it looks like within this consolidation we will have had a sort of spike below previous day's low, and then if it closes as an engulfing above previous day's high, that would be a positive development. Remains to be seen. Again, you can see with a lot of these markets where we're discussing them at the moment, BTC just poking previous week's high, ETH poking previous day's high. I don't love to trade around those areas unless it's to fade or mean revert. So in terms of continuation, it might be a bit of a tricky spot. But generally speaking, structurally, the more prevailing theme is that we came into a high time frame level, poked below it, but are now being accepted above, which is good, fine and dandy. The only issue on the daily is, as you'll recall, we placed a lot of emphasis on the pre-breakdown level at 1800. This sort of daily cluster here, and that is still, I think, a relevant level of resistance. So if there are any rotations higher or any entries that become available on the lower time frames, then I think regardless of whether it's the 4-hour, daily, hourly, what have you, the confluent first trouble area for that is the point of breakdown at 1800-ish, which is sort of 3-4-5% away. Okay, this is really the most important daily area that I'm paying attention to should the market continue to rally. In terms of daily time frame pullbacks, I really think we have to go to the 4-hour or hourly for this, because there really isn't a ton of structure here that I'm hugely fond of. Okay, so with that in mind, if we go to the 4-hour, we're essentially at a point now where the market can't go any lower than it has already traded, right? So if we look at this structure as a whole, we know there's a big level above us in the form of sort of 1800 that we discussed on the daily, this massive area. So it's already sort of pushing into that. But in terms of more local price action, the market essentially consolidated in this range, dumped, and now we're retesting that same range. And this is looking very phallic, but for our purposes, that's sort of what we're doing. So sort of peak diddling in the middle, trading this at the moment. But if we're going to get that higher time frame push towards 1800, there's no reason, especially after this spike that took out all of the consolidations, all the lows from this consolidation, there's no reason for the market to be going back and closing below that level, right? So if we map that on the 4-hour as the lowest close at 1717, especially after this spike, I think any bullish argument you're making, which in itself is rather uncomfortable, at least from a positioning point of view, because we've already had the big reaction, we're still trading within this range, and above us we have a higher time frame level. Regardless, purely in terms of invalidation, if the market's going to trade higher one way or another, there's no reason for the 4-hour to puke this, because if we look to our left and look down, there's no structure that I think would make sense all the way until the base for some sort of lower high, support, pullback, or whatever. So it's really 1700 or go home as far as what buyers in this market are going to cling on to, I think. ETH is slightly trickier, and again, similar, exactly same picture on the hourly. This was our range, we dumped below it, and now we're retesting that same range, right? So this is it, really. That's the structure, regardless of the time frame you're looking at. That's really all I have to say for ETH. Again, it's unfortunate with many of these that at the time of recording, we've sort of had the visible bounce into resistance. Like here, it traded to an extremity, back into the other side. For BTC, sort of very similar. We had the 4-hour cluster at this range low. We traded right into it and already had the big reaction, and now it's slightly less clear than it was, but still I think worth bearing the high time frame picture in mind. So that's really all that makes sense to me in terms of ETH. Hopefully that's somewhat clear. As far as other markets go, oh yes, the point I was going to make with regard to ETH is that ETH BTC has been weak throughout this. I think the reason for that is the market is speculating that if there's going to be strength in the market, given the prevailing narrative is Blackrock Bitcoin ETF, that the flows are going to be more Bitcoin centric. So if you have a setup in BTC and a setup in ETH, unless the ETH one is much clearer or better than the BTC one, I think it generally makes sense to position that way in, expressing those views through Bitcoin as the stronger market for the time being, at least in the short term, than in ETH. Okay. Final point I'll make with regard to legacy stuff. Again, if crypto flows become overwhelming, legacy correlations don't really have to matter that much. If we have an indiscriminate buyer, a sort of price insensitive buyer in our market, it doesn't really matter what legacy does unless it does something really silly. I will note on the monthly time frame that we're still pushed into monthly resistance on the S&P 500. If we take this pre-breakout range and take this block, box, cluster, whatever you want to call it, and use it as a range, we're trading at the range midpoint at 4,400, and the other extremity is the range high at 4,530, which also lines up with this last lower high here. So sort of early resistance at 4,400 on the S&P. If we have one final push, I think 4,500 is going to be really important, and then maybe all the TA guys get completely blown out and this thing just makes a new high. But for the time being, we'll work with the levels we have, and I think 4,400, 4,500 are on my radar for this week for the S&P. And just as a quick sort of for demonstrative purposes, a lot of these clusters, blocks, etc., they're just ranges on lower time frames. So this would be our sort of monthly cluster. If we look at it on the daily time frame, all it is this range here, right? Range high, range low, range midpoint. We just have one candle to express it on the monthly instead of all these candles on the daily. But you can see it's literally the same structure, right? It's a range. That's sort of what a lot of this seems to boil down to, regardless of what specific price action nomenclature one employs. So that's really all I've got. Hopefully that was somewhat clear for BTC, ETH, and the S&P. We'll talk more about the Blackrock ETF, whatever stuff, in the newsletter tomorrow at tlletter.com, and we'll cover it again on Casual Friday. You can listen to our comments on it from last episode on the channel if you just go back a couple of videos. That's all from me. As always, thank you for watching. We're supported by Woo, so check them out. Lots of good changes there, and at least read our article, see if it makes sense for you. That's all from me. Have a wonderful week, and I will speak to you later. Bye-bye.